Alright guys, welcome to the video. Anthony Special here with Hawkeye Traders. Hope everyone's having a wonderful day. Going to be talking about identifying ranging areas within the market, employing the Hawkeye volume, and incorporating price action into understanding potential reversals when trading within a range. Because guys, you got to keep in mind something. Statistically, the market only trends roughly about 30% of the time. So what does that mean? The other 70% of the time, the market is either ranging, reversing, consolidating, congesting, doing all kinds of things that unless you're able to understand what's happening, you're going to suffer to be able to succeed in placing trades during ranging conditions. And the fact of the matter is, as you progress in your trading career, you're going to have to understand that you're going to need to apply different approaches based on different market conditions. And in order to do that, you need to first understand exactly what's happening, when, where, and why, and then be able to say, all right, now I need to create an understanding of what I'm dealing with so that I can go to my trade plan and go, all right, I'm in a ranging market. I need to employ a ranging strategy that works for me consistently over time. So this is the NASDAQ 100, all right? This is the futures market. This is a 3-minute candle or 3-minute rotation. Each candle represents 3 minutes. As you can see, opening bell transpired here, 9:30 a.m. Eastern Standard Time. We've been ranging, right? Like I would call this ranging. This market's really not going anywhere, not proficiently at least. So what I do in ranging markets is I just simply say, all right, where is my strongest rotation here? All right, notice I got strong selling volume coming into this specific candle at 9:06 a.m. Notice there's a big wick, a small body, and even with the same amount of selling volume the prior candles had, this candle here does not exhibit the ability to go any lower. So to me, that candle's pretty important. And for, in most cases, you can look at the entire candle itself and go, all right, whether it's just the wick or the candle, does this provide any insight to me about what may transpire next? So I have increasing selling volume with failure to go lower. That tells me, with a big wick on the bottom and a small body on top, that, hey, I should be aware that this could be a potential reversal. Market pops up ever so slightly, we get what's called a green bottom, right? So we start plotting buying volume with a big wick on a candle that closes lower than it opened. That's a green bottom, right? You can see the market then goes on to push higher. We come back, we retest this area on strong selling volume, right? Our selling volume decreases in the next candle, and the next candle actually closes higher than it opened. So that's a strong reversal sign, right? We did not get any continuation on this selling, and we ended up pushing back higher. So we have a failed attempt to go lower. We have a green bottom. We have a reversal, right? So this area seems to be pretty meaningful, right? When we go to the top here, I need to now identify, hey, what's happening? Where is the market having an issue trying to go higher? So I'm going to do essentially the same thing. I'm going to draw a zone around the first area where the market fails to go higher, and I'm going to call this area my resistance zone, right? So I have support down here. I have resistance up here. All I've done is drawn 2 boxes, right? But there are key candles that I need to now look at. As I push into this area, notice I have increased buying volume, failure to push higher. Notice that all of these candles here failed to close above this specific level. On the next run, I get super strong increased buying volume and failure to follow through. The market falls, we get decreasing buying volume, okay? The sellers start to pop in, and then we encounter a red top. Right? What does a red top tell us? Super strong reversal. Now we push until we encounter a green bottom, right? Then we correct. And now we're just still chopping around. But we know that this area has proven itself multiple times to provide some level of resistance. This area has proven itself multiple times to provide some area of support. I know this simply because the volume tells me so, right? So there's a bunch of key candles here that we need to look at. This one here, right? Ultra high buying volume, no ability to push lower. followed by a green bottom inside of the support zone. Okay? Then the market pushes up. We create this area here where we fail to close above this level. We see at this point increased buying volume. Right? 1, 2, 3, 4 candles prior to, we start to increase buying volume. Failure to follow through. The market reverses. We come up and retest again. We have very minimal buying volume exhibited as we try to approach this. We push back lower. Ultra high selling volume here with zero follow through. Okay, this candle right here exhibits zero follow through based upon that ultra high selling volume. Okay? Market pushes back up into the resistance area. We have strong buying volume as we come into this area with failure to close above it. This candle right here, notice we increase 1, 2, 3, 4. All right, so we get 4 increasing buying volumes into this 5th candle here with no ability to push through or above the zone. Then we follow this up with a retest of a red top. Okay, notice as price pushed back in, we increased in selling volume, creating a big wick, tiny little body. What does the market do? The market then sells off until we start to encounter new buying volume, right? So all we have to do, guys, is pay attention to how price action is reacting to volume, right, at these key levels. What's the easiest thing to identify here? All right, we have failure to go lower, green bottom. All right, that gives me a reason to want to buy. What am I risking? I'm risking this zone here, right? I want to get long based on the green bottom. If I'm wrong, we're going to fall below this reversal candle. When we push up here to the top, I have increased buying volume, no follow through. Maybe that's not the easiest or most comfortable place to try to get short. We get the retest. We then again fail. Boom. Then we get the red top. Right? So to me, what are the most key things here? Right here. That's my green bottom. Okay? And this is my red top. Right? Green bottom, red top. Right? This green bottom provided the opportunity to push all the way here into this high. That's 433 ticks at $5 a tick. Right? This red top so far has been able to push as low as roughly 268 ticks. Okay? We haven't been able to reach this area yet. Perhaps we don't. I want you to also take note of something. We have a low, a slightly higher low on the green bottom retest, and then we place an even higher low here on this failed ability to push lower. So what does that tell me? There's a good chance, because my lows are beginning to increase with each test, that perhaps we placed a higher low here. Notice this wide bar printed strong selling volume, and so far we've seen no follow through. Right? So if this creates an area where we reverse and start pushing higher on the day, that's certainly possible. Right? I got to take all things into account. But the easiest things here that we were able to identify, just playing the green bottom red top game, was green bottom retest of failed high selling volume, red top retest of failed high buying volume. These two areas right here were the most predictable reversal areas. How far they're going to run, nobody knows the answer to that, right? Because wherever other traders decide that the price has either gotten too expensive or too high, that's where these areas are going to incur. If we can break the low of this wide bar, we probably go lower, right? What would concern me here being short? This green bottom would concern me, right? Because there's a chance for reversal. This wide bar would concern me. High selling volume, no follow through. What would I have done on both of these occasions, right? I would have taken profit, and I would be taking more profit, because there's a chance, because I noticed that there are higher lows being placed, that there's a possibility I may place a sequentially higher low. right? Notice this little level here is where price is sitting on right now. Again, it comes into taking all things into account. Okay? This little level right here was an impulse, a correction, and then the follow through. So if I looked at this area and I said, all right, I got to be kind of careful. Where's the last spot that price kind of retraced? I got to look at the wick of that candle. Notice that's where the green bottom occurred, and that's where the failed push below occurred. But all of this is possible by simply understanding the relationship between volume and price action. So what I'd like you to do next is go below this video, click on the link. I'd like you to watch the training webinar. I'd like you to take out a piece of paper. I'd like you to take notes, right, throughout that training webinar. I'd like you to reach out to us with any questions you have. We'd like to get these indicators populating on your chart, get you access to the Hawkeye Volume Mastery Library so that you can start understanding and putting together the thought process of what transpires between volume and price action, so that you could do exactly what I just did in the short video over the last 10 minutes or so that you can understand when you're in a ranging market, when you're in a trending market, and where the highest probable reversals are going to occur. Why? Because this is what is going to make you a more consistent, more disciplined trader. Most people clutter their charts with all these different things and forget to focus on what's most important, right? Because every indicator that you go to your platform and start to, pick out here are all just derived from volume and price action. So what does that tell you? It tells you that volume and price action are really the only things that ultimately matter, and everything else is lagging. Volume and price action is going to tell you what the market intent is, right? And that's what you have to understand as a trader. What is the intent of other market participants? Then can I identify it, include that into what my trade plan tells me to and how to, and then execute it, right? So those are the components of what make the difference between a consistently disciplined and profitable trader and a consistently losing trader. Very different, okay? So I want you to click on that link, watch the training webinar, take notes, reach out to myself, reach out to my Hawkeye Concierge team with any questions you have. I'd like to get these indicators populated on your chart. They work on TradingView, TradeStation, NinjaTrader, and MetaTrader. So all the popular platforms will support our software. Okay, I want you to access the Hawkeye Volume Mastery Library. I want you to start understanding not only the relationship between volume and price action, but start putting that together in your trading process, in your analysis process. And I promise you, you'll start to remove all the other indicators and garbage that you have on your chart and start just focusing on what matters. Because if you understand what matters, nothing else matters, right? Everything else becomes noise. At the end of the day, volume and price action, the relationship between the two is the only thing that will set you apart from a losing trader and a winning trader. Winning traders understand volume and price action. They just do, okay? Because they know it's the only thing that matters. Click that link, consume the content, reach out with any questions. Let's get the indicators populated. Let's get you access to the training. Let's get you focused on what matters in the market. Guys, I appreciate your time. I look forward to hearing from you. Look forward to working with you. God bless, and I will see you in the next video.